I'm an accountant, and in this video I'm going to teach you some tips on how you can grow your wealth. I'll talk through a number of different strategies and techniques that I've used over the years which have helped me grow my wealth, and hopefully that'll be useful for you, so something you can incorporate into your lives. Tip number one then is you need to earn more than you spend. So it sounds really simple, but I think this is where most people get it wrong. So if you wanted to grow your wealth over the years, then you need to have a surplus of money coming in. And so the only way you can achieve that is by earning more than you spend. So some ways you can get after this then. You need to identify in your life bigger expenses that you have, and where possible try to minimize them as much as possible. For most people, significant costs are accommodation, transportation. You should focus on the most significant costs, see if you can minimize them as much as possible. The thing you need to avoid is lifestyle inflation. So over the years, you're going to get promotions, pay rises, and that's going to mean that you can afford to buy more. However, it's really important, if you're wanting to grow your wealth over the years, you need to avoid the temptation to increase your spending as your income rises. And so avoid keeping up with the Joneses is a common term. So don't worry about other people and what they're up to and what they're spending their money on and what nice cars and nice houses they have. Just focus on you and making sure that every extra paycheck you get, extra pay rise, you're making sure that a significant amount of that money is going towards you and growing your wealth. It's about getting into really good habits from an early start. So a great habit is to ensure that you pay yourself first. So each time you get paid, rather than waiting until the end of the month to put any surplus into your savings accounts and investments account, get into the good habit of making automated savings via direct debits and standing orders into your investment and savings account. That's going to take away any temptation you have to spend the money on other things. So it's very much about cost control. However, the thing with reducing costs is there's only so far you can take it. At some point, you're going to want to live a reasonable lifestyle, and you can only cut back on so many things. So that brings us nicely on to tip number 2, which is look to ways to increase your income. So whereas reducing your spending is limited because there's only so much cost control that anyone can live with and have a happy life, the amount of money you earn, however, is unlimited. I know it might not seem like that all the time to some of you, especially if you've got a salary, and you might see that as a fixed thing. But with the way things are today and the amount of opportunities there are through the online world and the internet, there are endless possibilities to earn more income. So the first place to look then is, and I'm assuming people who are watching this video have a job, and the first place you can look to increase your income is actually in your job. So you might have been in the same industry for a number of years. Over that time, you've built up a lot of experience. So actually the first place you can earn more money is by looking in your job role to see whether you can increase your salary. So the first thing you could do is you could go and speak to your boss and try and negotiate a pay rise. During this meeting, try to get across to them the benefits that you'll bring to the business. Therefore, you can paint a picture to them as to why you deserve to have a pay rise. If that doesn't work and your boss isn't willing to negotiate a higher salary, then potentially look at moving to a different employer. A good way to increase your salary is by moving jobs. So once you've, because at that point you can negotiate a new salary which could be higher than your previous one. Also, don't just think about your employment as well. There's additional ways to make money, so look to take on potentially a side hustle. This can be a great way to make an extra income on the side alongside your salary. And the best thing about us having a side hustle is that this means that you won't need to live off this money, and so it's all just an extra bonus to you, which you can then look to invest to further grow your wealth. Okay, so points 1 and 2 then, we've covered how you can reduce your costs and how you can increase your income. And kind of the main part of this stage then is to come up with a surplus of cash. So each month you're putting away an increasing amount of money each month as you're able to save more, because you're earning more and you're spending less and keeping your lifestyle costs under control. That's going to result in a surplus, which you need to think of something to do with it to grow your wealth. Brings us nicely on to tip number 3, which is to look to invest your money. So you're not going to become a millionaire, or it's going to take you a very long time to become a millionaire by just saving your money. And in fact, having money in a savings account is not good over the long term. There's something called inflation, which is going to eat away at your money, because the rate of inflation currently, for example, in September 2003, is higher than the interest rates on savings accounts. So that means actually the amount of money you have in your savings account is reducing over time in real terms. So it's mean the spending power that money provides is reducing over time, and so therefore saving money and keeping it in savings account is not a good way. It's not going to help you get wealthy over the long term. So what can you do about this then? You need to find ways to grow your wealth and provide returns which are higher than the rate of inflation. In order to achieve this, there's really 2 ways that I've certainly used over the years, which are going to help you grow your wealth. Okay, the first of these is investing through the stock market. So you can use your surplus of funds to purchase stocks and shares in company. Buying shares is essentially like buying part of a company. It entitles you to a percentage of the company's profits, and any capital growth of the value in shares as the value of the shares increases over time. Now, it's common knowledge in the investing community that for the majority of people, it's not a good idea to invest in individual shares on stocks and shares yourself. And so what you should do is instead you should focus on a low-cost index tracker fund, and it really takes away all of the thought process away from you. There's also different funds which follow different indexes, and so they could either be global focused, or you could have one that focuses on a particular country, such as the USA, the UK. Where possible, you should focus on a global index tracker fund, which is low costs. Okay, the next way you can invest, and this is my favorite, is to invest in real estate or property investment. So here you take your hard-earned money, which you've saved over time, and you invest into property. So in the UK, we call it buy-to-let. Here you purchase properties, which you're going to be able to then rent out, and over time you're going to benefit from 2 things. Firstly, the rental income from renting out the properties to tenants, and secondly, the capital growth. As the value of the property goes up over time, you're going to benefit from that. Another one of my favorite things about investing in property is that you can utilize leverage. So when you go to buy a property, you don't need to put down all the money for the property yourself. You can get a mortgage which is going to provide usually up to 75% of the value of the property. So you just need to put in the 25% of the value of the property, and then you can benefit. But the best thing is, even though you're paying interest to the mortgage lender, you're benefiting from the capital growth. So as the property goes up in value over time, all of the proceeds of the capital growth belong to you. And it's a great way, using leverage is a great way to magnify your returns, because even though you're putting in a 25% deposit, you're benefiting from 100% of the capital growth. And it makes your return on investment high because you've got your 25% deposit. So this means if your property goes up in value, say for example from £100,000 to £200,000 so it doubles in value over a number of the years, you put in your 25% deposit, and because of leverage, that makes it a 400% return over those years. If you bought the property with cash, it would be a 100% return. So you essentially 4x your return over the period that you've owned the property. This is a great way of beating inflation and maximising your returns over the long term. Investing in property has its downsides. It's a lot more involved. Investing in shares, it requires a lot more of your time. So even if you use kind of agents to manage the properties for you, you still then need to manage those agents. So it's a lot more time intensive than investing in shares. But the main advantage is that you can use leverage, which is more difficult to do so when you own shares. And so overall, this makes it my favourite of those 2 investments. That you need to make sure that you're tax efficient throughout. And so tax are going to eat into your returns, particularly as you invest. And so ways to achieve this are, if you're investing in shares in the UK, there's really 2 tax efficient wrappers that you can use. The first is an ISA, individual savings account. So if you go for a stocks and shares ISA, this is going to mean that the dividends and the capital growth from the shares or funds that you own is going to be sheltered from tax. And so that's going to ensure that you're returns can compound over the long term. It's going to maximize the amount of growth in your wealth that you can achieve. Another way is that you can invest in pensions, because they're extremely tax efficient, particularly if you're a high earner in the United Kingdom. You can benefit from tax relief on your pension contributions. So you'll pay, if you're a basic rate taxpayer, if you invest money into a pension, you'll get 20% tax relief from the government, which is paid into your account, which you can then use to buy more shares. There's an additional benefit though, if you're a high rate taxpayer in the United Kingdom, you benefit from an additional 20% tax relief, which you can then claim back on your tax return. So you can see how pensions can be a really tax efficient way of growing your wealth over the long term. The downside with pensions is though, whereas an ISA, you can access the money whenever you need it, pensions, you have to wait till you're older to be able to access it. It means for somebody who's younger, whilst it's a good long investment horizon, it's a long time before you can actually access the money, and you need to make sure you have funds which you can access if you need to spend in the sort of medium term. So the ways to be tax efficient are then, if you're investing in property, you could look at investing through a limited company as opposed to having it in your own name. This is because if you're a high rate taxpayer, you're going to benefit from lower corporation tax rates within a company as opposed to in your own name. Another plus side in the United Kingdom is that you're going to benefit from mortgage interest relief in a company, whereas if you invest in your own name, you're only able to claim a basic rate deduction for mortgage interest, which means that higher rates taxpayers are therefore disadvantaged, so therefore should consider buying property through a limited company. So now I'll talk through the 4 different tips on how you can grow your wealth. So just to summarise then, you should always look to earn more than you spend, keep your costs under control and avoid lifestyle creep as your salaries increase over the years. You should look at identify ways to increase your income, whether that's through your salary, negotiating a higher salary, moving jobs so you can get a better salary elsewhere, or starting side hustles to gain additional income sources. That's going to then result in you having a surplus of cash, which you then can put to work to grow your wealth. The best ways to do this are either through investing in the stock market or investing in property. You need to make sure though that you're tax efficient in whatever venture you go with. So for using ISAs, individual savings accounts, and pensions if you're investing the money through stocks and shares. And if you're buying property, consider buying through a limited company, especially if you're a high earner, so you can pay corporation tax, which is lower than income tax. Just to finish off with, I thought I would just tell you what I do then, some of the tips that I've picked up over the years and how I've managed to grow my wealth. In terms of earning more than I spend, I've always lived quite a frugal lifestyle. As my salary's increased over the years, I avoided lifestyle increase. I've looked to really minimise my kind of key costs, and so one for me is particularly housing. So in the job that I've had for a number of years, I managed to I was lucky enough to have subsidised accommodation, which I used and maximised the use of, which meant that I was paying lower than most people do for their accommodation charges. And this has enabled me to save that surplus, which I would have otherwise been spending on where I live. In terms of income then, I've always looked to maximise my income. I've had my main salary, but then I've also I've had side hustles. I've had various different side hustles over the years. The best of which has been my accounting business, which I've been running for the last few years now, which isn't my main gig. I've still got a job, which is my main income source, but I have now a business on the side, and all the profits from that business, I can then invest that into growing my wealth further, and that's been a really good way of maximising my returns over the years by increasing the amount of capital I can invest to grow my wealth. I've looked to invest any surplus of cash I've had, and I've done that through stocks and shares. I've made quite a lot of money over the years on stocks and shares. I probably also lost quite a bit as well, but I do think I've made more than I've lost. I have actually sold a lot of shares over the years to actually invest in property, which is my preferred way to grow my wealth. So my main way to grow wealth on the side is through investment property, and I've done this for the last few years now. So I have a limited company where I buy new properties through, and I essentially invest in buy-to-let properties. So I identify areas where I'd like to benefit from capital growth over the medium and long term, and also where I'm going to get a good return on a good rental return. And basically any surplus cash I get from those properties goes to buying more properties or to improving the ones I already have. Any additional savings I have from my salary or from my side business also go into buying more property. And over the years, those returns are starting to compound, and it's mean I can just buy more and more property. So I'm at the stage now where I can buy multiple properties in the year. In my early first few years of investing in property, I was really doing one every few years, but now it's multiple properties per year, and I think that compound rate is going to increase over the years, and I'm just going to hopefully be able to buy more and more. And then finally, I've been tax efficient throughout, so I've maximised the use of pensions, particularly as my salary's increased and I've become a higher rate taxpayer. I've also paid into ISAs, although my preference recently has been to buy property, so I've probably not used the ISAs as much as I'd have liked to. I've focused more on property. But with the property itself, I've been investing through a limited company, which has reduced my tax liability. Okay, so there's some of the ways I've been able to grow my wealth over the years. Hopefully you found those tips useful. If you did, can you please like the video and then look to subscribe to my channel where I'll put out more similar videos in the future.